that brings us to our next segment, Karen, and that's scary. What are the indicators you're going to be watching in the next month, across the next? I mean,
well, I think there's short-term, medium-term, and long-term. Short-term, yep. Everybody's looking at jobs.
Okay,
and we'll
that
see
comes
a blip
out
up, and we'll see it down, and is the stimulus money coming through the the pipeline or not? In the energy space, we look at, in the short, medium term, what is happening to the stocks out there? Are people drawing down on natural gas and on oil? That means they're going into the manufacturing sector. That means the economy is starting to gin back up again. Longer term, you're looking at the boardroom. People are making investment decisions. Are they going to cancel a project? Because they're looking 10, 15, 20 years out. Do they have faith in our economy or don't they? Are they pushing their capital overseas? Are they keeping it here? Or are they just keeping it in the sidelines? Right now, business is on the sidelines. A lot of uncertainty. Uncertainty is the name of the game right now. What are my health care bills going to be? What are my energy bills going to be? What's my tax bill going to be? Nobody knows.
Absolutely.
And so I'm not going to hire a $100,000 employee for a 3-month stimulus check until I know what my liability is.
$5,000 for the, Well, Tony, what indicator are you going to be watching over
You know, I stick with unemployment. I still think that that's for our domestic economy. It's really important.
It comes out on February the 5th. Probably going to be up, I think.
It's going to be up, and most of the forecasts that I see say that it's really not going to wane much over the next year. That we're going to look at 10% plus unemployment for most of 2010 and maybe into 2011.
I mean, that's what we economists are forecasting.
But let's not forget what the real number is. I mean, there's two real numbers that we don't talk about there. It's the number of people that actually have stopped looking. So that brings it up to 17 almost.
Right.
But the other number is, let's just use that 7 million figure, people that are really out of work. What about the other people that we need to actually create jobs for that are coming into the workforce? We actually have to create 20 million jobs over the next 10 years to accommodate who's actually moving in. So the number gets to be bigger and bigger and bigger.
The longer we go on with zero and slightly negative, 11,000 last time, and that'll be revised downward, I think. So, yeah, you're right. Just going to positive is not going to work. We've got to have a big positive.
That's exactly
Folks, we need 200,000, 200 to 300,000 a month would do it. But even then, it's still, back to Tony's point, even at that, you're still left with unemployment higher, because as what happens is, as the things get better, all these folks you just talked about, they're discouraged, all of a sudden become encouraged, and they get counted as unemployed.
I think you know, you made a comment that businesses are on the sidelines, and I agree with you, because they're uncertain about what's going to happen with their energy cost, their health care cost, and where the economy is going, what they should do. And I think the answer is, and what their taxes bill is going to be.
Big question.
And I think the answer to all of those are going to be higher.
Yes.
And that goes back to Ernie's issue about inflation. I mean, the expectation that we're building into our economy for inflation, we don't see it yet because of the recessionary impact on a daily basis, but eventually we're seeing higher health care, higher taxes, higher energy costs, and if current legislation that's before Congress goes through, we know what's going to happen with health care and energy would go up, and certainly the only thing that can offset that would be higher taxes to pay for that. So what we're really facing is phenomenal inflationary pressures.
On that, I've given my indicator to watch: inflation. All of a sudden, we've been doing this show for quite some time. I've never named that one.
Right.
I'm now concerned about the inflation that's announced and what that does. How to keep a track of it for what our viewers should be watching is the 10-year Treasury. That 10-year Treasury yield, it's up to 3.5. It's up to 3.6. Watch it if it goes over 4%, because when these inflation announcements come out about mid-month, usually 16th, 17th of the month, that gets folded into the 10-year Treasury, and that's the big gauge. In other words, don't look at the numbers so much. Watch what investors say. Back to
the forecast. Just to add to what you said, Ernie, the forecast that I read in the last 2 days said expect 4.25 to 4.5% on.
Boy, that's not even in.
Those
and I'm bullish on. I mean, I don't know if you call that bullish or bearish. I'm a hawk on terms of inflation. I don't even see that, but. Now those are the soothsayers,
right?
You know that's the more.
I didn't check with you. That's somebody else.
That's the more technical term we use, soothsayers. You know, but I don't see that right now. 4.5, but who's to say? But the Fed is talking 2.5,
right.
At most 2%. Now, why are they telling us that, and why should our viewers maybe take a little, maybe not ignore it, but don't take it to the lunchroom? Because reason is they don't want our expectations to change. Because then they know, Tony, when I go to you for a raise, I'm going to ask for give me at least the inflation rate. And you said, okay, that's 1.5%. That's yours for raises, but I'm going to say, no, it's 4.5. And then Karen's going to, Karen, I don't know how you giving out your wage. You try to convince your employees it's only 1.5.
It's only 1.5.
So that's why the expectations game is played, because once it gets to rolling in, all of a sudden it becomes a very big problem. Now,
and that's another reason why businesses, it's mitigating risk. That's what business does. It mitigates risk. There's a risk we don't know how to calculate right now into my business model, whether it's healthcare, energy, climate, taxes, inflation. Where are we going? And how do I make that long-term 20-year decision with billions of dollars at stake?
Well, now let's move to